All right, so delivery numbers were a miss, and some people don't care at all. Some people are absolutely freaking out, and surprisingly, Wall Street actually is going positive instead of negative, which is the norm with Tesla when anything like this comes up. But I have not heard anyone talk about the 2 points we're going to talk about today, and we're going to have a guest analyst on as well to give us his take on Tesla stock, and he's been on this channel for many years now. Some of you guys know him, some of you guys don't. He tends to be a little bit of an extreme bull type on Tesla. So make sure you stick around for that at the end. So Tesla delivered 435,000 vehicles versus the expected 455,000 vehicles. And that honestly, clearly is a miss. It's down by 20,000 vehicles or so. And I'm not really surprised, to be honest with you guys. They're retooling. Nobody knew how far production was going to fall based upon that retooling that was going to happen. It was told ahead of time. No big deal there at all. So I actually thought the number was pretty good, better than I really thought the worst case scenario would have been. But of course, Wall Street reacted in typical Wall Street fashion by beating it down 4% in the pre-market. But then Tesla kind of calmed the nerves per se, maintaining their guidance through the end of the year. Basically saying, hey, no problem. We'll make it up next quarter, guys. Don't worry about it at all. And that actually sent Tesla right up into the green, which in the past, that hasn't been the case. It hasn't really mattered what Tesla said. The market would just basically beat it down and beat it down and beat it down. And shout out to all my group members out there. There was absolutely no panic this morning at all. Matter of fact, there was actually a little bit of anger. If you judge by my DMs and everything coming into my DMs, a lot of people were upset that we didn't get that big red day that we thought we were going to get with Tesla after they kind of missed the delivery number. And if you want to be able to DM me as well, remember that the Columbus Day sale is live for my group where you get to keep that price for life as long as you stay a member. But that pricing expires this weekend where you can take advantage of all the courses that we have. We actually got 5 of them. You can use our stock analyzer tool completely for free. You can see all my buy and sell alerts in real time, my watch list complete with price targets for all those stocks. You get access to the best 6, 7, and 8-figure Discord out there. You get multiple exclusive videos every week directly from me, and jump on our live Q&As that we're actually doing this afternoon, and a ton more. There's no group out there that delivers more for the money. Some of the people's just stock analyzer tool costs as much as our entire membership does. So check out the pinned comment down there and see if a membership's right for you and take advantage of the sale. But back on track here. Here are the 2 things that absolutely everybody's missing and that I haven't heard anybody talk about yet. Maybe somebody will talk about it later this afternoon. Who knows? But as of the recording, I have not heard anybody talk about these 2 things. The first thing is Tesla is doing things now that are impacting the short term, but the long-term impact is going to be incredible. And just kind of follow me here for just a second, guys. This will all make sense. Being able to retool a factory to increase production now, but also causes some short-term pain as well, is exactly how you get Tesla back to that 50% growth rate that they've been struggling to get back to. To me, that's kind of the bigger takeaway with all this that I haven't seen anybody talk about. The first bigger takeaway that I haven't seen anybody talk about is that, yes, of course, everybody knows, hey, they're retooling, they're going to be better later on, but take that and extrapolate it out a little bit more, and you basically kind of see, hey, not only is it going to help them get closer to that 50% growth rate again, they're going to be able to retool the next factory and the next factory and the next factory and be able to do it better and faster and smarter and get better. And each iteration brings them closer, more capacity, more of everything to getting back on track to that 50% growth rate. Now we got a little bit of pain here. Hopefully the next time the pain is less and less, and especially as these other factories, as they get their retooling, produce more, it just basically increases that curve long term. But short term, there's that pain there that we're going to have to endure right now. Tesla is sacrificing short term things like quarterly deliveries for long term things like getting back track on that 50% growth rate. And even though Tesla is green today, I'm honestly excited because I think we're going to see some discounts because of reason number 2 that everybody isn't talking about or that everybody's missing. And that would be next quarter could very well be very rough in regards to revenue and EPS. Now, I agree Tesla's pulled the rabbit out of the hat before, so they may very well do that again. But I also know that the chances of having a revenue and an EPS miss just went up, and that's okay. That just basically means for me as a long-term buy and hold investor that I may very well get exactly what I want because traders are going to do trader things. If that revenue comes in lower than expected, and I know they're going to adjust guidance down based upon the delivery numbers and a lot of other stuff like that, but Wall Street may not care. They may not give Tesla that benefit of the doubt and a lot of other things that they haven't been giving Tesla lately at all. So if they come in with a little bit of a revenue miss, even if it's tiny, a little bit of an EPS miss, even if it's tiny, that may very well send the traders doing trader things and really beating down Tesla stock. Basically, price cuts, lower deliveries, that right there wouldn't surprise me at all. But that has me really excited as a long-term buy and hold investor because as a long-term buy and hold investor, that is the exact scenario that you love to see. You love to see short-term things that are intentional. Elon's doing this to gain market share. He retooled that factory to increase production long-term. Basically, the company taking and making decisions in the short term that affect the stock price short term, which of course means some pain, right? But I'm not selling. I'm not looking to sell. I'm not trading the stock. So, if you're trading or you're doing this, or you logging into your account every day to see if you're up or down, and then your mood's based upon that up or down because you're not looking 3 to 5 years out like you should be as a long-term buy and hold investor, you could be in some trouble there. But for those of us that are looking out 3 to 5 years, man, the chance to get Tesla under 200 again would be an amazing gift from Wall Street if they give it to us yet again. Short-term pain basically means cheap shares, which means you're going to own more shares whenever Tesla goes on its next run. And it will go on a run eventually, guys. It's been beaten down now for over 2 years. So, and we talked about that 2 years ago, and I said that and I got blasted. No, there's no way Tesla's ever going to trade down for 2 years again. That was an anomaly when it traded down for 6 years. Well, here we are 2 years later. We're still trading basically flat during that entire 2-year time frame, and that's okay. As a long-term buy and hold investor, unless you're one of those guys that's got millions of dollars in cash waiting and you can just kind of dump a bunch of it all in at once, or make 4 or 5 really large buys during a time frame like right now, if you're more like normal folks, like the rest of us over here, you're having to buy shares here, buy shares there. Every month I'm putting $200, $500, $800, $1,000, whatever it is into Tesla every single month. So every month I can get where the stock price is beaten down, that's another opportunity for me to add and have a larger position than I should have in a stock that I absolutely believe in long term, that's going to make me a lot of money long term. And that's the perfect scenario for building incredible, real long-term wealth. So that's exactly what you want as a long-term buy and hold investor. But there are others that maybe feel a little bit differently. So let's bring on our special guest, a Tesla bull, to see exactly what he has to say.
Let me get this straight. Luke says Tesla is probably going to go down because of these fake delivery numbers?
Has he been getting high with Gordon Johnson and then playing naked bongos around a campfire? What the
These numbers are clearly fake and meant to hide the fact that Tesla actually delivered 1 million vehicles this quarter, according to my sources, but leave it to morons like Luke to believe that complete stupidity that the news media puts out there. And he started channel number 2, I guess, to learn how to wipe his own butt after going number 2, so his mom doesn't have to do it anymore because she is old and crazy like him. Now back to Tesla. Here is the bottom line and the real math behind this madness.
1 million vehicles sold means $1 million per share. That is where Tesla should be right now. So I'm gobbling up all the shares by myself because I'm the Tesla bull. I'm the Tesla bull.